as buyers, we want low rates and low prices, right? They're just not going to happen. If we're in a low rate environment, it's going to push those prices up as we've seen over the last couple of years. But as we get into a higher rate environment, there might be some deals with a pretty attractive basis. There's some deals that we'd entertain a sale on right now. Don't love the rate, but it's all it is at the end of the day is cash flow and average annualized return. I mean, that's kind of the only metrics we're really at the end of the day we care about. Can this thing produce any cash flow, and can we produce a good average annualized return?
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We're back with our guest, Devin Elder. Again, today we're continuing to the conversation, but I know you are wondering about those market conditions. What is going to happen? What are we talking about here? Nobody knows, right? But I love hearing from guys like our guest today, Devin Elder, and what do they expect, right? Because it affects what they're doing. And you're going to hear that along with all the metrics that Devin watches and looks at every day in the business and some personal metrics that he cares about. I loved how he could list these out, and you're going to hear that in today's segment. I want to welcome the listeners back for a third segment with our guest, Devin Elder. I'm grateful to be able to spend this time with him. Again, he's somebody I've always respected in this space, and so I love the conversations. I hope you listened to the last two segments. And hearing how just an entrepreneur thinks, really, I think it's just incredible being able to pivot, be creative, and keep the revenue going while even keeping. I think the main thing, and increasing our returns for our investors and doing what's right by them. And he definitely showed that in the last segment. And so I hope you have listened to that, even listened to the day before we highlighted a 300 unit deal they're closing right now, and some of the mechanics of that, even the raise of that and how that's gone. I know you're going to learn a lot from that. But Devin, I want to dive back in. I get questions all the time about current market conditions, right? Everybody wants to know, especially from somebody like yourself that's very experienced, about many projects. And what I typically say on the show is none of us have the crystal ball. I hear that all the time, right? Of course, nobody really knows what's going to happen next month, even tomorrow, right? But nobody really knows. However, what we believe is going to happen affects what we do, right? It affects what we think, whether we're buying or selling as investors or whatever it may be, or whether we're hunkering down in a box somewhere. One or the other, right? It affects what we do. But I want to hear what Devin's doing, right? What are your thoughts on the market conditions? I know that's what the listeners want to know as well.
Yeah, I love it. Thanks for having me on, Whitney. Always a pleasure. Yeah, so much to think about what's going on right now. A couple of kind of just philosophies, I guess, the way I look at things. We're professional investors, so we don't sit on the sidelines. That's just, we're not pencils down. We're looking at deals every week. Now, is stuff penciling? No, it's not. But we're just looking at a lot more deals. A broker we work with said, we're having a conversation a couple weeks ago, and he said, things are happening. It's 10 times harder than it was. It's like you're punching underwater, right? It's you take for granted walking around, and then you try to go do it all underwater. You can do the same moves, but man, it's just harder. So just adjust into that. That's okay. Our grandparents might have been eating shoe leather in the Depression. That's a real problem, right? I don't know that we have real problems by that measure or many of the measures of our ancestors. I kind of joke sometimes that, our ancestors are looking down, just shaking their heads going, oh my gosh, what a baby. Right. And that's something that I think about a lot in earnest, right? Like if we're going through problems, what did my ancestors go through? So putting that in perspective and understanding, hey, sometimes it is the challenges that sharpen you or push you in a new direction. That's happened to me countless times in as an entrepreneur, where some pain pushes me in a new direction that I wouldn't have gone in otherwise. It turned out to be a blessing. It happens all the time. So number one, we're professional investors. We're not on the sidelines. We're always looking at deals. Number two, a thing I say internally is that every day that goes by and goes behind us is a good thing, because we started the rate hike cycle about a year and a half ago, right? Pretty abrupt 11 consecutive rate hikes. And if we look at these historically, they tend to be pretty abrupt and plateau and then come down. I'm not saying that's going to happen, but we are well into it. It is not the beginning of this thing. We are well into this journey of a hiking cycle or a recession or whatever label you want to put on it. A friend of mine gave a presentation at one of our events. We have events throughout Texas, and he's a debt broker. He's talking about the SOFR, the forward SOFR curve, right? SOFR curve projections over time. And they're always exaggerated, right? On what it's going to do. The projections, if you take snapshots over the years. So if you look at the SOFR curve now, the projection is, for it to go up. Those projections historically have always been overstated up and to the right. So, if that's going to be the case, all that is to say, our rate's going to come down for an election year in 2024. I don't know. It would help our business in a lot of ways if it did, but we're not modeling it, right? So then what do we do to get by today? Well, operations on the fixed rate debt stuff, you're feeling really good about some of the stuff you got locked in. Operations on variable rate stuff, you're feeling real good about those cap rates. Those cap or those rate caps rather might be worth $500,000 or $1 million if you were to liquidate them right now. And it's a good thing they're in place because the actual rate on a variable debt is higher. So the rate caps are keeping that in place. We got to figure some stuff out in the next couple of years as these rate caps mature or expire. So that's been, operationally and on the finance side of a couple of deals, just trying to get ahead of that, whether it's a refinance or a sale or really those are kind of the options, or buy another rate cap. So on the variable rate stuff, creating all kind of new challenges for the business. And then on the buy side, looking at, obviously the assumptions make a lot of sense. We're looking at a deal right now where we will probably do an assumption of a rate in the 4s with a supplemental that gets us a reasonable amount of leverage. And, I mentioned this before, but as buyers, we want low rates and low prices, right? They're just not going to happen. If we're in a low rate environment, it's going to push those prices up as we've seen over the last couple of years. But as we get into a higher rate environment, they're not automatically going to happen, but there might be some deals with a pretty attractive basis. There's some deals that we'd entertain a sale on right now, but I'm like, man, that's a really good price per square foot or price per door for somebody to come in and they're going to have to stomach the debt, but man, that the basis is pretty good. And as buyers, we're getting into some of those deals where don't love the rate, but it's all it is at the end of the day is cash flow and average annualized return. I mean, that's kind of the only metrics we're really at the end of the day we care about. Can this thing produce any cash flow, and can we produce a good average annualized return with reasonable degree of certainty? And so all the other variables, look, you could have 20% interest rates, and if your buy price was good enough and your cash flow was good enough, it makes sense at some point. So,
right.
It's just playing with the inputs. And I think the net of that is it's creating, from what we've seen, some good basis deals that, hey, we were praying for those a couple of years ago. My gosh, these prices are sky high. If I could just get something at a little lower price. Well, guess what? Prayers have been answered. Your interest rate prayers weren't answered. You're never going to get both at the same time, but we're seeing some basis on some stuff that really makes sense. And I think fundamentally in multifamily, you've got a supply demand imbalance. If you're depending on what markets you're in, you've got positive net migration, you've got job diversity, you've got all these other kind of macro economic things happening, housing shortages, where I don't think our thesis has fundamentally changed on multifamily. It's just 3% rates. Sure, we're nice, right? And we're not getting them. So we got to figure out another way to do it. So assuming debt, you're seeing a ton of that right now, right? Sponsors launching deals where, hey, we're assuming a 4.2% interest rate, which maybe wasn't exciting 2 years ago, but pretty exciting now. So
that's right.
Trying to make that work. And interesting how the capital markets have kind of adapted to be able to kind of facilitate that. So we'll see what, how bad the pain will get for operators next year. Will it create fire sale type situations? I don't know. Will there be a bailout? If Jerome Powell nods his head this way towards that he thought about a rate cut, is that going to send markets into a frenzy? We'll see. But, every day we get behind us, I think is a good thing towards, an environment where, I don't want to necessarily say where rates will come down. I personally can't see how we're going to afford our debt service as a nation for any extended period of time. But again, I'm not going to come on anybody's podcast and say, this is what's going to happen next year with a degree of confidence, right? We're trying to do the best we can with our portfolio we're operating and then new deals we're looking at without making any assumptions about huge rate cuts in the future.
Yeah. Yeah. No, I think that's well said. And yeah, I agree completely. We have no idea what's really going to happen, but I do think that I loved what you said earlier, actually. Things are happening. It's just 10x harder. It's like walking underwater. So it's like there is hope. There's deals to be had, even like this 300 unit, right, that you all are doing right now. It's man, who's willing to go after it, right? And keep hunting and keep searching or even pivot, like we talked about in the last segment as well. Devin, what would you say is your best advice for passive investors right now?
Well, number one, open up some kind of an E-Trade account or something like that. If let's say you got $1 million liquid, put it in somewhere where it's generating some yield. I think that's kind of a no-brainer. We were having this conversation last night with a group of investors. A friend of mine said, hey, I got $200K. I was going to open this Bank of America account. It's paying 5%. Should I do that? And I said, absolutely. Like this hasn't been a conversation for a decade because it was all earning nothing. Now, right. Your local bank may be paying you nothing on your savings, but there's a spot that's going to pay you 4 or pushing 5. My E-Trade account, I think, is pushing 5%. So have something like that set up. Is that going to last forever? I don't know, but definitely you're liquid and you're FDIC insured up to $250. So have that. And then I think it just depends on where you are in your investing journey. If you've got some relationships that with operators, and this business is so relationship based where you feel good about being in a project they have, great, do it. And I think it's the same advice I always have for any passive investor. And if you don't like a deal for any reason, just don't do it. Like there's going to be so many deals with so many operators. This is a game you're playing for life. Don't get any FOMO about stuff. If people are using too many exclamation points in their communications with you, don't do it. If your spidey sense is off, don't do it. I mean, I tell people that in our deals, I don't know if this is the right deal. And if you've doubt, just don't. And then just, you can't, yes, capital is losing purchasing power to inflation. You don't want to sit on the sidelines forever. But, my advice is the same now as it always was, is if it doesn't feel right for any reason for you, just don't do it. Your intuition is the result of 1,000 data points. Right. And your gut feeling is actually, your brain's got a lot going on that we're not cognizant of. And it's constantly absorbing 1 million data points to form that intuition. Pay attention to it. So, that's the same as I would say now or any time to an investor. But you got options to earn a nice 4 or 5% return. Next year, does that go away? I don't know. And then look at, I guess, the risk profile of deals that you are getting into, right? I've heard investors on our deals say they like some of our debt stuff because there's not a bank to worry about. There's not a variable rate. There's not, you're not equity sitting behind a lender. Even though our debt stuff pays 10, 11% versus 15, 20% projection on multifamily, lower projected return, but different risk profile. So, pay attention to the risk profile and develop those sponsor relationships. So I guess if I was going to sum it up, find a place to put excess cash that's paying you something, 4 or 5%. Maybe that's an E-Trade account. We've still got full liquidity, right? I wouldn't buy CDs and stuff like that. Number 2, pay attention to your intuition. Never do a deal you're not fully on board with, and that's the same in any market condition. Number 3, develop those sponsor relationships and look at the risk profile of a deal you're doing and where your money is in the capital stack. Investing is risk, right? If you're going to get a double-digit return or better, there's some measure of risk. So that's always the case. But kind of the same as us as operators. I'm not on the sidelines as an operator. I'm not on the sidelines as an investor. I do a lot of passive investing too, but I want to kind of understand the risk profile and maybe pay a little more attention to that than I have in the past.
Yeah, I think it's very wise. I love to just say, if you don't feel good about it, just don't do it. I mean, I just think you're doing yourself and the operator a big favor, right?
Yep.
Get in on their next deal if you really like them, and you feel good about it. But yeah, I think it's very wise. What would you say is your biggest challenge in your business right now?
Well, personally for me as, the principal CEO, I just have a lot of plates spinning right now,
Mhm.
So I'm working a lot on a lot of different things. And that, I've always been a busy guy. I run pretty high RPMs. So I enjoy it. I even had my coach. I've got a business coach I meet with a couple times a month. And he's like, look, man, you're 45, you're running all this stuff. You're in your prime. Like, good. That's go for it. Like, he's like, I can tell this lights you up running all this stuff. So embrace it, because I'm always talking about sharpening the saw and taking downtime and stuff like that. And he's like, I think you're pushing that part too hard. Embrace the work and get after it. So for me personally, right now, there's just a lot going on, right? I've got multiple companies, we've got multiple projects, different asset classes, things like that. So I've just got a busy day. I think that's just kind of me personally for the business. I think it's on the buy side for multifamily. It's trying to figure out the debt. It's like, man, how do we get the debt working? In some cases, it's an assumption, which is pretty straightforward. Other cases, you're looking at new debt with high rates and just trying to make that work. And in most of the cases, the pricing expectations haven't come down to make the debt work. So we'll see what the future holds there. But that would be the biggest thing is trying to get a deal to pencil with this debt, which is not a shock, I don't think, to anybody.
Is there a tip or anything you could share that's helped you to manage all that time, the time, as busy as you are and running a number of different directions? I can relate to that, completely. But any lessons learned as you're sharpening that saw, like you talked about, to do that better or well?
Yeah, I've been such a student of personal development and all these things really my whole life. And the current thing I think in this season of my life that I'm focused on is just trying to find every bit of advantage everywhere that exists in from the moment I wake up. And so that might mean it's a lot about diet and exercise and just stupid stuff like, hey man, what does my week look like? And am I going to make sure I'm going to line up my sleep so that I'm performing optimally? Because a slight edge in some of those things is going to translate to other areas. Another thing in kind of this busy season is being, immediately responsive to problems so they don't stack up. And I had a guy on my podcast who he is a pilot, and I'm a pilot as well. And he said, I'm a pilot and I want to solve problems immediately. If you're flying along and a light comes on, you don't go, well, that's interesting, I'll file that away for later and we'll deal with that in the Wednesday meeting. It's light comes on, you deal with it immediately. And so I think that's kind of always been my approach to things is something comes up. Is this something we can solve immediately right now? And let's just get it behind us and move on. And so that, one, looking for every advantage, whether it's energy or setting up systems or simplifying your diet so you're not tired after lunch or, all those things, to just look for all those advantages and find excellence in all these different areas that will compound.
Love that thinking. We're definitely a whole person, right?
Right.
So somehow people don't translate something you're putting in your mouth to maybe how you perform mentally, right?
Sure.
So I appreciate your just bringing that to light. What about what are some metrics that are, say, most important to you? Could be personally or professionally.
Yep. So I have a dashboard for my company, and it's a handful of cards. One of them is, and I'll just kind of read them off to you. And this is something that I look at all the time. So it's deals that we have offers out on and what that translates to in terms of, equity we need and fees we're going to take in. Deals we have, another card is deals we have under contract and what that translates to in terms of equity. And then we look at our investor KPI, which is, a call with a new prospective investor. And, we want one or two of those every single business day. So month to date, there's a gauge. How are we doing on that? And then capital raise year to date. So just tracking total capital raise year to date. And then we go down to kind of performance on the just straight occupancy across the whole portfolio. I can see in one shot. Now, obviously, if something's off on occupancy, I want to dive into what's delinquency look like, what do work orders look like, how much cash month to date. And so I'll dive in on some of that stuff. And then I look at tasks for the team that are past due. So, I've got 6 people reporting to me right now with all kind of manner of tasks. As long as they're getting done, not really on my radar, but if they're past due, it pops up. Transparency, the whole team sees that. My tasks pop up there too. If they're past due, nobody really wants to be on that list. So track that. Another metric I have one of our accountants do is months of operation in the bank for my operating company. So it's just a metric of the last 3 months. Let's say easy numbers. Let's say it costs $100,000 a month to run one of my companies. If I have 300,000 in the bank, I have 3 months. So months of OpEx. And it's just is it 1 month, 2 months, 3 months, 5 months? What is it? And and I don't even know from looking at that dashboard how much money it is. I just know based on the trailing 3, how much money do we have right now in the bank account? And what I found is just cuts through a lot of the noise, because you could run reporting 6 ways Sunday, but how much do we have in there? And if we lower our operating, spend, well, then that T3 will trend down, and that same dollar amount will be more months of operating expenses. But I like to just see that at a glance. And then I have our total, I guess you call it AUM, but total real estate owned, which is about $250 million right now, $260 million. And so that's something that I track. And then I track grants. So we have a 501c3 nonprofit foundation. I track how much money have we given away for the year? And I kind of want to see that on the dashboard too, which to me is like a balance to the whole thing, man. We're charging on these companies and making profit and paying investors, but as those companies grow, our ability to write grants to mostly local nonprofits grows too. So that's on my card. So those are my KPIs on the business. Family wise, we just try to have adventures as a family, whether it's going to play golf together, going to the beach, going to the ranch, going on vacations. And I like to do 2 of those a month with the family, even if it's just a little getaway to somewhere local. And then I kind of have some health metrics, work out 3 times a week. I have an extremely strict diet, but I love it. It doesn't feel like a diet. And that's it. That's kind of the whole picture. But I think it's important to have metrics and look at them all the time.
Yeah, I think it's incredible. I love it when people could say, "Hey, here are my metrics." I mean, it just shows that you do look at it right every day. That you can just list all of those off like that.
Yeah.
What do you use for your dashboard? Is there a software? Is there what do you use to track?
Yeah, so we've got it's funny. Every software company wants to be a CRM, and they're all like okay at it, but they're missing one critical thing. So we have 3 platforms right now. We have MailChimp for mail. We have AppFolio for investor relations, which we love. And then we have Insightly as our CRM, which does not necessarily investor stuff quite as much, but it does all kind of automations around the podcast, around projects, around acquisitions. So Insightly is kind of our hub. We call it somebody says the CRM internally, it's Insightly. And then in a former life, I would build these things out for companies that I worked at. So I kind of just whipped ours into shape where I've got just a really nice high level visual component, a dashboard where, somebody else is updating it and I can just go in, hit refresh and look at it. I think there's a lot of probably software solutions for that. We just, I like to keep it simple and look at the high level stuff and be able to find it in one spot without digging into a million reports or requesting things. So that was my solution, was building it out in Insightly, but that's not necessarily an endorsement. It's more, I think, about identifying what are your KPIs and identifying a system that you can reliably have someone else update, and just, make sure that it's getting updated and that you've got one place to kind of go look at the gauges.
Love that. No, I get questions about software all the time as well. So I always like to ask, because I know there's listeners that are wondering too.
Oh yeah,
especially when you lay out something as organized as all the metrics and how how to see that in a concise way every day. So that's incredible. Devin, how do you like to give back?
Well, I started the DJE Foundation in 2020, and this is a self-funded foundation that takes a portion of profits from a couple of my operating companies, not from the investments, right? If we buy an apartment complex, none of that goes. But when we sell the apartment complex and the 25% ownership comes back our way. That does come into the company. A portion of that does go to the foundation. So it's been set up, it's self-funded, and the goal is every quarter we say, hey, we're going to take a portion of profits into the foundation. And then the foundation really has like no overhead. I mean, maybe like QuickBooks, and that's kind of it. And the goal is just to write grants. So we'll say, hey, there's a local foundation, Aid the Silent, that does stuff for deaf kids. And I'm close with those folks. And if we can give them 15 grand and that's a bunch of hearing aids for some kids in South Texas, that's a win. There's Lighthouse for the Blind's another one we just did a grant for. There's an orphanage in the Philippines that a friend of mine set up. So there's just kind of personal relationships. And what one of those nonprofits told me was, hey, as I was kind of trying to find our identity around giving, because that's always been important to me, and I wanted to kind of formalize it through a foundation and grow that over time. And I was like, I don't know what our purpose is. And they said, your purpose is to go make money. You're a business guy. That's your purpose. We spend all day doing, figuring out how to help these orphans in San Antonio out, and we need money, and you make money. So like, this is perfect. And it just took somebody kind of grabbed me by the shoulders and saying like, no, your purpose is to go be a businessman and go do it as well as you can, so you have more money to give us. And we're finely tuned to make a difference in this specific way. So that's what we do. We write grants, and so far that seems to be working. I'm always open to, my hope for the foundation is I have it for the rest of my life, and we continue to just get better at having impact year over year. I still think it's a baby we got a lot of room to grow, but it's very intentional. It's there. It is, giving money away. And I think gives me a lot of peace and joy at that. As the companies grow, that piece automatically grows.
Awesome. Devin, I'm grateful for you sharing that, even starting a foundation to give back in that way, being that intentional, right? With giving and thinking through that. And I love that. Obviously, that's incredible. But even the way you've given back to us today, right? In the last few segments, you've given a lot of your time, even thinking through today's segment, just laying out the market conditions and what you think about them. And I mean, you laid out a lot of detail, which I think the listeners, I encourage you to even go back and listen to again. I thought it just laid out some really good points, even some advice for passive investors right now, which I thought was really good. And even laying out the metrics that you kind of live by, I think is helpful as well, especially, as people are becoming entrepreneurs and striving to think about, hey, what should I be looking at? What's important to somebody like Devin that's been successful and done so many deals? So it's so helpful. Devin, thank you again for your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, Whitney, thank you so much. I really enjoyed catching up. It had been too long, and always love to catch up with you. Website for us is the best. The company's DJE Texas Management Group. So you can find us at djetexas.com. That's like Delta, Juliet, Echo, and then Texas spelled out. Got podcasts, contact us, things we're up to, all that fun stuff there.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.